VYM's 77% crushed RSP's 56% over 5 years. That's a 21-point gap you can't ignore. VYM's crushing it with 19% returns versus RSP's 15%. That 4-point gap holds across every time frame. VYM dominated the race with a 21-point lead over 5 years, then kept winning with another 4-point victory over 1 year. VYM's stronger Sharpe ratio means you're getting better returns for each unit of risk you're taking on. VYM's Sortino ratio of 0.9 crushes RSP's 0.6, meaning you're getting better returns for the downside risk you're taking. Risk-adjusted returns are about mechanical leverage, getting maximum output for minimum input. VYM delivers more bang for your buck, earning more return per unit of risk taken. VYM's 16% drawdown versus RSP's 21% proves downside protection matters when portfolios are bleeding red. VYM recovered 8 times faster than RSP, just 61 days versus 486. That's resilience when it matters most. RSP sank deeper into the pool and took over a year to recover, while VYM bounced back in just 2 months. VYM's 2.3% yield beats RSP's 1.6%. That's 44% more income compounding in your pocket over time. VYM's dividend growth doubled RSP's over 3 years. That's the difference between stagnant income and actually growing wealth. VYM's like the tree that starts fuller and grows twice as fast. Your income stream gets bigger every year, while the other tree barely sprouts. That 0.14% gap might seem tiny now, but it's tens of thousands you'll keep over decades. VYM's 6% turnover versus RSP's 21% means you're keeping more profits and paying less in taxes. RSP's constantly bleeding money through fees and trading costs, while VYM keeps almost everything invested. Think couch change slipping away versus staying in your pocket. VYM's 8-point overweight in financials paid off big when that sector rallied, outperforming RSP's lighter allocation. RSP's 6% real estate bet hurt returns when the sector tanked. VYM dodged that bullet completely. VYM dominates across the board. Better returns at 77% versus 56%. Smaller drawdowns, faster recovery, higher income, and stronger dividend growth. It's the clear winner here. VYM grabbed bigger pizza slices of winning financials, while RSP spread itself too thin across losing real estate. Classic case of concentration beating diversification. Equal weighting promised safer diversification, but RSP actually delivered worse returns and deeper losses than VYM's value focus. VYM's targeted dividend approach proves that smart stock selection beats spreading yourself thin across everything. RSP gives every stock equal weight. Everyone gets the same at-bats. VYM concentrates on top dividend payers. Your best hitters bat more often. VYM crushed RSP completely. Higher returns, better risk control, superior income, lower costs, and dramatically faster recovery times. My RSP took 486 days to recover, while VYM bounced back in just 61. That's over a year of waiting. VYM bounces back in just 2 months after a fall, while RSP takes over a year to recover, like marathon runners with very different recovery times. VYM delivers reliable income with a 2.3% yield and steady 3.7% dividend growth compounding over time. VYM's for steady income seekers with 10-year plans, while RSPs for aggressive believers in complete diversification. VYM's your steady ride to retirement, while RSP's the risky speedster that might zoom ahead or leave you stranded for over a year. The boring but essential stuff. Do your homework before investing, folks. If you enjoyed this ETF breakdown, hit subscribe for more weekly deep dives packed with real data.